Hey everyone, welcome back to your weekly market outlook. This is for the 4th to the 8th of December 2023, the first full trading week for December. So fundamentals last week, I think there are a couple of things to take note. I think number one would be the preliminary GDP numbers coming up from the US. This comes in at 5.2%, an increase from 4.9% and above consensus of 5%. In terms of monetary statement, last week we have the RBNZ maintaining rate pretty much unchanged at 5.5%. I think the key driver last week was definitely comments from Chair Powell. This is in regards to the potential rate hike in 2023. I don't think that's going to happen. I think Fed fund rates has already put in a 97% vote in terms of a no hike in 2023, so there's no more rate hike in 2023. There are talks about the potential rate cuts that could happen in 2024. I think comments coming up from Chair Powell in terms of rates staying higher for longer, I think the tone has kind of shifted a little bit. So market is currently pricing in for a potential rate cut to start happening in March 2024. I think the projected rate cuts to happen was about 6 to 8 rate cuts in 2024. Obviously, that's what market is expecting, but it does create a lot of impact in the market itself. I think we have a huge movement that happens on Friday, and we'll take a look at it from a technical perspective. All right, so for this week, we have the RBA interest rate decision, which is going to be tomorrow, and last week we have the inflation report coming out from Australia. It does fall back down below 5%, coming in at 4.9%. So in terms of interest rate changes tomorrow from the RBA, I think RBA is probably going to keep it just the same at 4.35%. I don't think there's actually any room for a rate hike for tomorrow in terms of RBA. And then we have the ISM Services PMI from the US, probably not a huge impact because it's already above 50. Market is currently expecting an increase as well back to 52.5. Joel's job opening numbers expected to drop down. And obviously we have the NFP numbers this week, so let's just focus on that for a little bit. Unemployment rate is expected to remain stable at 3.9%. In terms of the NFP numbers, we are expecting a little bit of a gain here, still below 200,000, but market is expecting a 185,000 gain. Previous month's numbers was 150,000 gain, so we're expecting a little bit of an improvement in terms of the employment numbers. Also, the average hourly earnings also expected to improve a little bit from 0.2% to 0.3%. All right, so let's just jump into the market. I think a few key drivers here for the Aussie USD. I think with the Aussie USD, we saw that gain that happens on Friday, and obviously that gain is pretty much towards the end of the trading session on Friday. That's also on the back of the comments from Jay Powell with the shift in tone there and a potential talk about a potential rate cut in 2024 to happen a lot earlier. That drives the Aussie a little bit higher. But in terms of the key levels, we are maintaining a very strong key levels. Last week we talked about a move beyond 66 cents, and we were looking at that 66 cents to kind of be the demand area for Aussie. As long as it maintains a position above 66 cents, the Australian dollar basically just did that. It didn't actually close below 66 cents. It's currently moving up a little bit higher. Now, in terms of resistance this week, we definitely want to take a look at 67 cents. This is the current level and kind of very close to where we are right now at the start of the week. This level could be the potential resistance area for the Aussie USD. This goes all the way back to July, August as well. And again, in terms of where the pivot is currently located, resistance 1 is located at 67.10. So we are going to assume that 67 cents is going to be the next key stronghold here for the Aussie USD. And especially if the RBA did not hike interest rate tomorrow, if there's no surprise increase in terms of the RBA, and if they come up with a statement that, could point to a little bit of a dovish tone, it could actually send the Australian dollar back down to about 66 cents. Now below 66 cents, we still have 65 cents. So this is currently still within an acceptable range at this point in time. Next up is the EURUSD. For the EURUSD, we saw this one retreated from 1.10. There's a little bit of a selling that happened at 1.10. In terms of the movement here, comparing it to the Aussie USD, the gains in the euro, it's a little bit muted. Now this one here, we're still looking at support building out at 1.0850 to 1.09 range, and price is currently still trading within this range. The probability for this one here is that if it does close below 1.0850, there's actually a lot more room for correction for the EURUSD. This could actually send the pair back down to 1.08 and potentially 1.07. Now, the one that's actually really interesting is actually the pound USD. Last week, we put out a weekly review as well as the end of the week market review, and there is actually a very clear intent to sell at 1.27. If you take a look at the price movement at 1.27, last week it actually attempted to break 1.27 every single day, and what happened is despite the run on Friday, the market actually gapped down a little bit today and is actually still below 1.27. So the intent to sell at 1.27, it's still there, and we still see a lot of sellers taking a look at this order, this level as kind of an order block, and this goes all the way back to August. If you take a look at the movement at the end of August and mid-August, this is where the 1.27 order block is kind of being formed. Now, with that in mind, as I said, the intent to sell is really very evident in the pound USD. The problem with this is that we can also see that buyers is also there on pretty much the same equal strength, because what we saw in the market is basically price just moving back and forth between 1.2625 to 1.27. So we definitely see sellers in the market at 1.27, and we also see buyers at the lower end at around 1.26. So this one here, it's about even. Now, as we start the week, obviously, take a look at where the pivot level is located. It's at 1.2680, 1.2675. It's still around the psychological price level. So this week will kind of be the deciding week in terms of the pound USD. It's too close to call for a short at 1.27, even though the evidence is there. We see market is being capped at 1.27. So obviously there are sellers, large amounts of sellers that comes into the market at 1.27, but it's really unable to push price even further for at this point in time. So this one here is kind of still debated. I would say the evidence that we have of sellers coming in at 1.27 is it's much stronger than buyers around 1.2675, but we'll see what happens here. So definitely 1.27 is going to be the contested level for the pound USD this week. If it's unable to break 1.27, and if it dips up to 1.26, I think the buyers around 1.26 is probably going to shift momentum and go for a short in the pound USD. Now, next is the dollar Japanese yen. This one here, we broke that key level, that key range 147.25. We are trading below 147 at this point in time. We do have a little bit of support building up between 145 to 146 yen, but the momentum is there that we see in the dollar Japanese yen, that it is currently being pushed down lower. And it's very evident in terms of the trend that we have here. The RSI still points to further room to the downside, but we are looking at 146, 145 to kind of be a strong support area for dollar Japanese yen at this point in time. So if you have a short position, would be good to be a little bit more cautious about 145, 146. It could be profit taking, could be buyers coming into the market, because 145, 146 is definitely the key level. That was kind of the range in the month of August, where it kind of clustered together after the change from the Bank of Japan in terms of the YCC. But definitely want to watch out for 145, 146. I think that level is likely going to be a very strong support for the dollar Japanese yen. In terms of resistance, obviously 148 previous support is now our major resistance for the dollar Japanese yen. Now, lastly, I want to talk about gold. This one here, we can pin it down to two factors. Number one is the dovish comments coming out from the Fed in terms of potential rate cuts and whatnot. Market is pricing in for that rate cut, but what happened is we saw that spike that happened in gold. It's actually this morning when the Asian market started. That pushed gold from 2070 all the way up to 2144. Now, obviously, this is a new high. This is an all-time high that was achieved by gold today, this morning. That breaks beyond the high in May 2023, which is an all-time high at 2079. So the push there is attributed partly to what JP was saying. The Fed was commenting on the interest rates in the US, and also the attacks on the American warships in the Red Sea. That kind of pushed the gold safe haven status a little bit to the upside today. But considering this, as we approach an all new time high status on an asset, it becomes a very dangerous situation to continue holding on to that asset. Now, for a few good reasons. Obviously, buyers are not confused, but they are not able to determine where to actually exit out of the position. So there's actually fear on the buying side, and also on the sellers, they are probably going to be reluctant to actually sell this because it just broke all-time high, and the movement today, it's about $70. It is a very significant jump in the market today, but you can also see the sell-off that happens in the market. So there's obviously profit taking that happens in the market once price pushes up higher. We can see that wick that happens. Now, if we take a look at the movement in May 2023, what happened after that all-time high is it's actually followed by a lot of selling in the market, and we actually see market kind of push down significantly to the downside going forward. Now, this could be the same with the current condition. Obviously, the things that are different here, it's the situation in Gaza. If it kind of intensifies again, and that could push gold a little bit higher, or at least maintain a higher level. But for this one here, what we're looking at, if there's any drop below 2070, that could actually trigger more selling in the market, and we are probably going to be returning to pivot, which is at about 2050, and all the way down to support one at 2020. Below that support level, depending on how strong that selling is, we would not outrule the potential for price returning to about 1975, 1985 for gold. So this one here, it's very tricky to navigate, because in order to have a new position in gold, we need a little bit of a pattern, we need a little bit of a range to develop. It could be an intraday range. A lot of traders would probably wait for Monday to kind of be done, and then create a little bit of a range for them to actually start figuring out where the stop losses or take profit level is located. So be very careful with gold, because this one here has reached all-time high. I know all the sentiments in the market is that, oh yeah, you know what, it's time to go in all in on gold because it posted an all-time high. But as a trader, we should be really careful about this kind of perspective in the market, that we don't really want to be biased too much. So we should consider what happened in the past. May 2023 all-time high, we saw a long wick, and in terms of the price movement and the wick that happened today, it is a much bigger wick today. So, and the selling pressure could actually be a lot faster as well. For now, we are looking at 2050, where the pivot level is located for this week. If price is able to maintain a position above 2050 for this week, then yeah, buyers might come back into the market, but really depends on whether or not gold is actually going to survive and maintain a position above 2050 at this point in time. All right, so with that, good luck with your trades, and I'll see you soon.